government to stop cash withdrawals from all government accounts, says Nigerian Financial Intelligence Unit. President Muhammadu Buhari transmits 2022 Finance Bill to Senate, and Asia-Pacific markets mostly higher as Japanese stocks see second day of losses. Plus, oil prices rise to $80.92 per barrel on a U.S. drawn down Chinese fears way. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. Good to have you join us at this time, and it is that time we talk business. And we start by telling you that President Muhammadu Buhari has transmitted the Finance Bill 2022 to the Senate for consideration. National Assembly correspondent Ignatius Nkwo reports that the bill is to support the implementation of the 2023 budget.
Specifically, this bill's provisions enhance tax equity by bringing more economic sectors into the tax net and ensuring a fairer distribution of revenue receipts to all tiers of government. Respond to climate change challenges through incentives to support the utilization of gas as a transition fuel, as well as disincentives for gas flaring and venting.
All is now set for the sale of 5 National Integrated Power Project (NIPPs) following agreement reached by the federal government and state governors. The Director General Bureau of Public Enterprises, Alex Oko, said in Abuja that the expected 260 billion naira proceeds from the sale will go into next year's fiscal plan.
Getting a common stakeholder understanding on the critical need to realize value from those assets now before they depreciate beyond value. Thankfully, last week we were able to resolve the issues with the governor. So for those assets, we're likely to reach financial opening of the bids before the end of the year, which is maybe next week, right? But the proceeds itself will come in the first quarter of next year. So we actually project that in the first quarter of next year we'll be able to exceed the expectation of the budget for 260 billion. By March we should have done that.
And the federal government is to activate the stoppage of cash withdrawal from all public accounts with immediate effect. In place of cash withdrawals, public officers are to be made to open domiciliary accounts in foreign and local currencies ahead of the commencement of the new policy, which follows on the heels of the new Naira withdrawal policy introduced by the Central Bank of Nigeria. A statement from the Office of the Director of Nigerian Financial Intelligence Unit, Modibo Hamman Tukuru, says that the introduction of the new policy became necessary following consistent devaluation of the Naira and the introduction of a new Naira policy, which automatically activates Section 1 of the Money Laundering Prohibition Act. The action is also said to have been activated following observation that most cash withdrawals from government accounts, including payments for ESTA code for public officials, are often in excess of the cash withdrawal limit provided by the Money Laundering Act. The development, according to NFIU BUS, exposes innocent public officials to being liable to imprisonment. Tukur also said the NFIU is already developing an advisory to the Secretary to the Government of the Federation, state governors and local government chairmen across the country to direct all public servants in their employment to open domiciliary and Naira accounts ahead of the commencement of the policy, which becomes compulsory by law. The Bank of England on Tuesday released new designs for British pound banknotes featuring King Charles III. This was stated by the bank via its verified page, where it said that the new notes will be in circulation by mid-2024, and nothing about the design will change, apart from the image of the monarch. The bank stated that notes with the image of the Queen will continue to be used and that fresh notes will only be created to repair damaged ones or to fulfill any need for additional cash. The bank says this is in keeping with royal household guidance to reduce the environmental and financial impact of the transition. Meanwhile, the House of Representatives this Tuesday asked the governor of Central Bank of Nigeria, Godwin Emefiele, to unfailingly appear this week, Thursday, or delegate a capable official of the bank to brief the House on the newly rolled out cashless policy and redesign of the Naira. The National Assembly correspondent Lami Ali reports that the House took this decision after receiving a second letter from the CBN explaining the governor's inability to appear as he was outside the country on an official engagement.
The House of Representatives had 2 weeks ago passed resolutions requesting the Central Bank of Nigeria to suspend the policy limiting cash withdrawals and invited the CBN governor for a brief on December 15th. The meeting was rescheduled to December 20th as he was out of the country. A second letter has been communicated to the House from the CBN explaining the governor's absence.
The House in the interim had taken a position. The issue of him coming was just to fulfill all righteousness.
No, sir, the issue of him coming is in compliance with the law.
Yeah, compliance with the law, but we had
Yes.
already passed a resolution asking him to suspend the implementation of that policy.
Give the man another chance to come, and when he comes, all these questions can be raised. I believe Nigerians will be convinced, and those of us who are here, foot soldiers of Nigerian people, will take the right decision on behalf of our people.
And you are thinking of another date, Thursday. Are we sure that's going to be available this very Thursday?
In fairness, at the time the invitation went out, he was already out of the country officially. We will be requesting to find out what that official assignment is that will keep the CBN governor away for almost 2 weeks. We should resolve to invite the CBN governor to brief this House on Thursday morning, and if for any reason it is verified that he is unavoidably out of the country on Thursday, that he asks his deputy governor or anyone who is well equipped to fully brief this House so that we do not carry this thing until next year.
House members have resolved to investigate the alleged loss of $2.4 billion from illegal sale of exported crude oil dating back 2014, as raised by Representative Isiaka Ibrahim.
The entire cargo of 48 million barrels of burning light crude was sold without the proceeds being remitted to the coffers of the country.
Lami Ali.
On that note, let's see how the Naira is exchanging for the British pound and other major currencies. The National Bureau of Statistics has said Nigeria's gross domestic product (GDP) grew by 2.25% on a year-on-year basis in Q3 2022. The Bureau, however, stated that Nigeria's GDP declined from 3.54% in Q2 to 2.25% in Q3 2022. Our discussion will be centered on the third quarter GDP growth, and joining the conversation is an economic analyst, Dr. David Aheruvo. You are welcome to Business Express.
Thank you, my brother. How are you?
Doctor, we are good. Good to have you.
Customer.
Yeah, sure. Particularly when we have to talk about the economy, its growth trajectory and all of that. Well, looking at the figures, the GDP figures for third quarter, before we go into the details of the third quarter, if you look at our GDP growth, it's been very consistent consecutively, despite the global recessions, the coronavirus effects, which we are still going through, trying to build a resilient economy towards that. We have experienced growth on year. Yes, quarterly, this quarter, there is a decline. But before this decline, we're talking about on year, there is a growth. Yes. How would you describe, what's the secret of this growth?
The growth does not meet our projections. If you remember, the growth for the year was about 6-point-something%.
Sure.
Now, when we had that projection for 6-point-something%, and we now start having an economic problem.
Then there were reviews, downward
reviews. But yet, we are not still able to meet in any of the quarters to meet the 4 to 5% projections we've reduced to. Now, well, it is not a bad thing. We have not entered recession according to the statistics. But what we discovered is that we are on an increasing trend. And once we are on an increasing trend, we have to review the contributors to this GDP and try to bring up those that are not doing well into limelight and attack whatever is the problem that is making them not to do well.
Okay, having commended the economy for its resilience, recording whatever level of increase, and we're not able to meet targets. I think very few countries around the globe have been able to meet such targets. Everything has been a downward review. Then with the Q3, we're talking about where we have a decline of 1.7% from 2.25%. What is likely responsible? Yes, inflation might be cited. What other factor is responsible for this? Then aside that, I want you to also add up to tell us what are those sectors you mentioned. What are those sectors that are doing well and the ones that are supposed to do well but are not doing well? And what is the reason why they are not doing well?
Okay, because of your short time, I will quickly answer this question by saying that the ones that are doing well are in the finance sector, finance and insurance sector. I also note that we have some in mining sector will have been doing well, but it has a challenge. It is only oil and gas that is taking the large chunk. And this oil and gas is even having a downward trend too because of the leakage we are having. So these are
the oil theft
issue. Yes.
But that being handled by the relevant authorities and production coming on board.
It might
particularly
not
from the
reflect.
Shell area, talking about the excavos in the Warri area. Are we expecting much more oil contribution to step up? Because the bulk of this, like you've said, is coming from the non-oil sector.
Yes.
Now, would you see in the next quarter, perhaps?
Exactly. That's where I'm going. Okay. If the problem is solved, then the next quarter will reflect that positively. And of course, there will be more contribution from the mining and quarrying sectors. Then the other sector that I am very particularly worried about, that is within the mining, is the steel sector. Okay. Because this is the basis of industrialization. And it cut across everything you have to do. In fact, the major reason why we are having a very serious setback, Nigeria would have been one of the best countries. The major reason why we are having a serious economic setback is because we don't have a major steel sector.
What's happening to Ajakuta?
In the 20 industrialized countries, there is none that is not a steel sector, that is not depending largely on its steel sector. And Ajakuta is lying there. We could not raise it up. My advice to the federal government is that do a private partnership with any person that is willing, or fully privatize it.
Can an individual actually take that bulk of an investment? While I wait for this answer, there are pockets of steel companies, public-private sector initiatives that are upcoming. There is one behind us, not far here, talking about the one in Kaduna. They are doing amazingly well. What do you see that adding to the economy?
Now, if you know the Nigerian steel requirement, 17.6 million tons per annum. That's our requirement.
That's huge.
Very huge.
How much of that are we meeting?
Ajakuta alone, if it's fully commercialized and is working fully to a full capacity, will produce at most 6 million. Then by the time, if you revive Osogbo steel mill, Katsina steel mill, with Kaduna and with the one in Delta, all of them will not produce more than 13 to 14 million.
So there will still be a deficit of 3 point something million
to be imported. So what Kaduna is producing now is just a drop in an ocean. So we need that, so that heavy equipment that is required for production, if Ajakuta is working, and tractors will be produced there. Tractors will now subsequently improve agriculture. Train will be produced there.
Road infrastructure.
Road infrastructure will subsequently be lasting longer, and train will be supporting the transportation system. So all these need to be addressed. And I really don't know what to say, because this thing is
You're saying it already. Let's talk about the non-oil sector. The contribution of non-oil sector. Where is the place of agriculture? Agriculture has been a good contributor before now. Then we're talking about the ICT that is actually coming up so well, and transportation. And talking about transportation, this is Xmas festive season, where prices of flights
and transport fares are rising.
The Jet One oil is becoming scarce, and airfare is being on the hike. Then the local transportation from here to, you're from Edo State?
I'm from Kogi State.
Kogi State.
Yes.
So Kogi is not far. But I hear the price has also changed.
Yeah,
how is that affecting the economy all in all?
Yeah, it shuts up the prices of commodities and goods. Why is that? If you are used to transporting 1 kg of gari, for example, for 10 naira, and it's now 20 naira, you have to up your price to cover your expenses. So that is how it affects the other sectors. Now, the transportation system could be tackled by this train system we are talking about. But train system is very expensive to establish.
And to maintain also.
And to maintain. It costs about 52 to 55 million US dollar for a kilometer of rail.
That's for construction?
For construction. So if you take that, by the time you are constructing, let's say 1,000 kilometers, you are spending more than 55.
Thank God the federal government is looking ahead and establishing the local content, where we have the Chinese now trying to produce the components of this in-country to ensure that we have not just the workforce, but also the raw materials. Yes, he's still talking about the steel, but it's a process.
Exactly. The steel, if you don't have the liquid steel now, which Ajakuta is meant to produce, if you have a liquid steel, billets will be easy to produce, and billets will be used for the rails. For the rail gauge. Now, if you are importing the rail gauge, it is still very expensive. But if it is produced locally, it will have reduced drastically more than 60% of the cost.
Thank you so very much, Dr. David, for sharing your thoughts and wisdom at this particular point in time.
Thank you very much.
The stakeholders out there have heard from the wisdom that we dig from the deep.
Thank you very much. I appreciate it.
Moving on. Oil prices rose on Wednesday after data suggested a larger than expected draw in U.S. crude stockpiles, but gains were capped by growing concerns over demand in China. Brent crude futures were up 93 cents at $80.92 a barrel. U.S. West Texas Intermediate crude futures gained 80 cents to $77.03. Both contracts had risen by more than $1 earlier in the session. Analysts say prices were also boosted by comments from Saudi Arabia's energy minister, who said on Thursday, perhaps Tuesday, that the heavily criticized move by OPEC Plus to cut oil output turned out to be the right decision. We now see prices of other commodities on the global market. For a look at stock markets outside the country, let's join Bosiri Abel for global stock market update.
Markets in Asia traded mixed Wednesday after Wall Street ended its four-day losing streak as global bonds rose after the Bank of Japan adjusted its yield curve control tolerance. Japan continued its second day of losses as the Nikkei 225 fell 0.68% to 26,387.72. Shanghai Composite 0.17%, while the Hang Seng Index gained 0.34%. European markets were in positive territory on Wednesday, reversing a negative trend seen in previous trading session. DAX gained 0.75%, FTSE 0.47%, and CAC 40 also gained 0.96%. US stock futures were slightly higher early on Wednesday. Futures tied to the Dow Jones Industrial Average added 243 points. S&P 500 futures rose 0.60%, and Nasdaq 100 futures also climbed 0.55%. Africa markets traded mixed on Wednesday. South Africa's JSE Africa Top 40 gained 0.79%. Namibia's overall index 0.17%, while Tunisia's Tunidex dipped 0.12%. Boss Swede Able, Business Express.
And moving on, stocks trading in the Nigerian stock exchange market advanced marginally following market reaction to possible entry of startups as declared by the market authorities. At the close of trade, the oil share index rose 49,475.43 basis points, and equity capitalization ended the session at 26.947 trillion naira. University Press, Thomas Worth, and Africa Prudential led the gainers table, while Joe Paul, Mutual Benefits, and FTN Cocoa led the losers. Returns on Thursday at 9:30 a.m. I am Benny Adam saying have a beautiful rest of the day.